Hello people, right, this is a video for TradingDuck on Twitter, and I really wanted to clarify a few things here. Basically, the Asian session low that I've taken off the chart and the MAs and all that stuff are all sort of various other trading tools, as it were, or strategy tools, but the fact remains, and I need to make this clear. First thing I do or want to do in the morning, when this 4-hour bar isn't here, so this is pre 6 a.m. in the UK, or just 6 a.m. when we've got a new start of a new H4 bar. I want to see what the price is doing in relation to that high and low there. Excuse me. If it breaks out long, I'll try and take a long, providing the RSIs all agree on the various time frames, and I get these 3-candle reversals that I absolutely have built my whole strategy on. Really, the RSI is quite a newcomer. Then, as we can see, we know we will have to break out. Well, this is my view anyway. We have to test that support and break out of it, so that's an important level to have on at this point too. And then really that's all you need to worry about. Make sure you check the RSI. We can clearly see, I haven't got the 40 levels on this. It's just because I keep different templates for this is what I call my clean template, if you like. It hasn't got the lots of the other stuff on it, basically, so that I can do exactly what I'm doing now. Okay, that's the new levels on there. So we were oversold at that point as well, slightly divergent, which is what I talked about as well in previous videos and previous charts. So let's get onto H1. We can clearly see you could draw an ascending, descending trend line and all that sort of stuff as well, but on H4, but it's a bit pointless. We can definitely do it on this one now. So connect the points that make higher highs, obviously the latest ones being the most important, the most recent I mean. Here has broken that high there, so up the price goes. Then the candlesticks and the RSI, there's the divergence I was talking about. Higher high making a lower high, price, lower high in the RSI. And then as I say, candles, and at this point we can start to, because we were looking at shorts, we're talking about this short trade, we can start to draw in various levels that may have affected price. So we could stick an H1 low in there, because if we added those two together, or all of these inside bars and that high there, this would be the reversal level there. So that is important, because obviously if we close through there, or we're through there before we consider entering, we've got clear air to the next important level, if you like. Not a lot else we can talk about there, except we've had a reversal, a recent reversal with a shooting star, I think that's called, or an inverted hammer. I'm not really bothered about the technical terms for these things. That's definitely an engulfing bar there. So everything is looking seriously short, and that's what I meant by the pump and dump scenario. Notice now your trend lines look a bit odd, but I'm not worried about that. The perfectionists will all be screaming and jumping up and down now, but you know, develop your own methods and own them, as I said in previous. So there's the engulfing 30-minute reversal, and now we can clearly see the H1 and the H4 that I think I drew on my previous charts. I'm not going to bother looking to see whether I did, but the important thing is we are clearly demonstrably down, broken the 20 level with that one candle there, so that's always worth keeping an eye on. So it's difficult, you know, there's so much that I observe on these charts now, because it is second nature, and really that's the thing. This is the point I was trying to make on a previous video about concentrating on one particular method and owning it, and then you can start to add back things like the perhaps the moving average, rubber band trade, the the Asian session breakout and tests. If they confuse you, dump them and use a clean chart like this and just concentrate on the candlesticks. So don't think I've missed anything on that 30-minute that's worth worrying about. Below zero, engulfing bar, great big a break of that H1 low with the 30. The H4 was broken way up here. That's what I meant by the upper H4 candle. That was the original breakout level. It looks tiny now, but it was huge first thing this morning. H4 high, H4 low, sorry there. And then bearing in mind I didn't actually take this trade, we've spent an awful lot of time describing it. I just chose to sit on my hands. I didn't really watch it happen until after the event. It would have been very, very close call as to whether I took it, to be quite honest. But I should have taken it. I've done this before in the past, News wasn't due till, I think, 9:35, and then something like, or 9:30, excuse me, and then it was 10:35 for Euro News, I think, all the other way round. 10:35 was cable news, Euro News was earlier. So back to the chart, the 15-minute. Once again, let's have a look at the 5-minute to see where exactly the trade would have been, because I didn't actually take the trade. So that's the break and close level there. Back to the 15-minute to orientate ourselves. So yeah, at the point of the M5 entry, this is a bit confusing now, sorry, I'm confusing myself. Yeah, the H1 low had been closed through, that's right. So that was the trigger to say go short. Yeah, so basically, and I guess the Asian session low must have been around here somewhere, and the this would have cleared virtually everything, but I would have been aware of this H1 here, so I would have probably have waited for the break of both of these levels, because, as I say, the Asian session is only a guide to what may happen. It's not really something that would bother me at all. I said to another trader in direct DMing about the fact that the RSI really is my first port of call nowadays. So I start with the RSI, look for changes of colour on, say for example, even the daily. If the daily has changed from green to red, that's obviously bearish. And then the H4, if that's a recent change too, brilliant, which it probably would have been here because the previous H4 candle was green. Then we had the little red inside bar, and then it was anyone's game for the new one. And then, but it was obviously changed direction from green to red. So just move down the charts, let the RSI tell you what it's doing all the time. H1, obviously you want the more recent reversals in order to, because that's what it's all about, change of sentiment, momentum, call it what you like. As you get to the lower time frames, then we really are studying the actual momentum and waiting for that bust, pullback, break and close, which is there. The way I would trade this was, as I just said, the M1 break through, so drop down to the lower time frame, have your level on there, and the rest, as they say, is history. So we could draw that descending trend line now that notably was respected with this pullback here. That was on the charts before it actually happened, as is often the case, which is useful when you want to consider re-entering charts. And if you wanted to use your 1 minute to get back into this trade, probably the best way would be to wait for, because we have actually had a 3-candle reversal up. But if the RSI on the lower time frames tells you yes, we've changed, have a look at that 5-minute chart candle there. We can see it's not a bust, break and close, but with the momentum to the downside, the clear test of that descending trend line. There will be stuff over on the left hand side, but I don't want to confuse matters that this has probably come back and tested. So always have an eye on the left hand side of the chart, always understand what's going on the charts. The other thing I didn't mention on the text back to TradingDuck was the test of the 1300 level. That's always a good sign. Test trading off of those sort of strong levels that have been tested. The reason they say is because people put their stops, the short traders put their stops behind there, and the long traders put their orders to go long behind there. So they bring the long traders in and they take the short traders out. That's my understanding of it anyway. So if we drop to M1, going a bit more into detail than I intended to, but M1 off of this, oh hang on, I've lost my place now. Yeah, M1 off of that lower, off of that descending trend line, where we are here. There's your bust, break and close on the M1. It would have probably closed through any resistance, the 3 candle resistance on the M5 there, so there's no resistance to act as support. So that is often a way to get into these trades, using M1 a little bit ahead of the game. And then boom, it's gone down again for another few pips. So that would have been the entry for that one there. The candle under the green line now. There's your bust, pullback, break and close, momentum entry. Down it goes. The RSI, I can't tell you guys, if you don't do anything else, study the RSI until your eyes bleed, because that thing with trend lines, 3 candle reversals, here's, you could just draw a ascending trend line break here as well. I mean, it's just, there's your trend up. All it's gone to do is test a level up here, a supply area where the sellers have accumulated, see whether there's any more sellers. They've found more sellers, and down it goes. Okay, apologies if that's in a bit too much detail, but if you want to keep things simple, just forget all the highfalutin stuff that I had to my charts. Stick to the 3 candle reversals, support and resistance, the pivots, and the round numbers and half round numbers, the important levels that all the big boys watch, especially as you could see it work on that blue level up there. They've gone back to push it up to there, and then boom, down it goes. So thanks for watching. Have a great Monday.